Hello and welcome to Crypto Weeklies. In this video, we analyze Bitcoin. None of the content financial advice. Right now, the price of BTC has now fallen quite a bit. Now at around $76,000. At one point, it reeled at around $82,000 to $83,000 in the first couple of weeks of May. Now that the short term rally is behind us again, the primary area of support is this red line over here, which is the 20-week simple moving average. I'll zoom it in a little bit more help it see clearly. Um, this level currently is at around slightly under $75,000, 74,999,997 to be precise. The price in 2026 did that breakout, a shorter term breakout above the 20-week simple moving averages. Now it's below the prior year's support, the 2025 support, which was at around 77, 78k, which was always the case after that first primary drop in February 2026, a rally back to the 20-week simple moving averages and the prior year's support level, like it did back in 2021, 2022, where that yellow line over here, which was the 2021 area of support, became a resistance in 2022. This time around not exactly a resistance. There was a shorter term break, slightly ahead or slightly higher than the prior year's support, but again now the trend is going down, which again in the bear market here is not typically a bad thing to happen. If, like, let's say we are comparing bear markets to bear markets, this is the 2014 bear market again. After that shorter term rally above the 20-week simple moving average, the rest of the year the price action stayed down only, essentially in 2018 as well. After that 2017 rally, there were a couple of instances in June, July, where there were a fake out of about a couple of weeks, where the price rallied above the red line and the green line, at one point as high as about the blue line, which was the 50-week simple moving average. But then again, after failing to go anywhere up from there, the price did correct quite a bit in the later half of year 2018. Similar story in 2022. Couple of weeks, 1, 2, and 3 weeks in April, late March, early April 2022, and then came crashing down again. Although that at that point the price was much higher than the prior year support, those levels were very well respected once that shorter term level was over, and then the price kept going down. Now in 2026, the likely scenario is that price goes down in the later half, at least goes again. I'll remove some of the areas to make it more clearer. Instead of looking at the Fibonacci levels, the prior year's support, which again 2025 was gone. Now the price action is lower than that area of support. The 2024 area of support, after that major pump in till about March 2024, in that correction in June, starting June 2024, May 2024, till lasting till about September 2024. This white line over here was the area of support, which was at around 54k. That could be the next target for Bitcoin if the downward trend were to continue and the price were to go back below the 20-week simple moving average. Right now, the price is still not at the 200-week simple moving average. Typically in the bear market years, the 200-week simple moving average, this blue line turns white. See, exhibit 1 in 2015, then in 2020, although price came really close to go sub 200 week in 2018, it acted as a support. In 2022 as well, the blue line turned white when the price went sub 200 week. This hasn't happened yet in 2026. That level, if the price action were to go sub $61,000, that could be an area to look for, at least in the short term, accumulation below or at 200-week simple moving average. Not the worst idea. The price did come really close to the blue line in the drop in early February 2026. So that's the accumulation target. The deep value zone is anytime the price goes sub 300-week simple moving average. This green line, which when turning red, like it did at the end of the last bear market. The current valuation of the 300 week simple moving average is at around 54k. That's the 2024 area of support as well. So that is something to look forward as well if there is a more panic in the later half of year 2026. Right now, as much as this correction has occurred, the monthly candle for month of May is still green. For in terms of the momentum or Heikanashi based candles, if the price action were to go below the 73k level towards the second half of May in the last 12 days, then this candle could also turn red. If that were to happen, then the bear market of 2026 would start to look more similar to the prior bear market years, the 2018 bear market year, that is no single green line or green candle since February 2018 till about March 2019. Similarly over here, from December 2021 all the way to December 2022, 1 year of nothing but red candles. This trend over here started in November 2025. Potentially this could end in November 2026 as well. Let's see if the price action were to correct below that 73k level. That could be a great indicator that the trend hasn't been broken. In terms of the total accumulation risk, Bitcoin risk is still elevated per my website, the composite risk model on my website cryptoweeklies.com, link on the bottom of your screen. The composite risk is still higher than 0.3. This is largely because as the price is still again, now the rally has gotten over the white line over here, which is the mathematically derived fair value using regression function, the polynomial regression techniques. The price is below the white line over here, which is typically when the price goes undervalued, but it's still not as undervalued as it is typically at this stage of the bear market. The fair value is at around 78,500. The price is 76k. This is the first week after that 1, 2 and 3 weeks where price action kept going higher than the fair value. Typically the last bear market at this point in May and June, there was a significant drop at that point. After that attempt to go above the fair value failed. This time around there was a shorter rally above the fair value, the mathematically derived fair value, but it's still not at that level where the undervaluation zone typically begins, the one standard deviation residual lower one band, which is currently at around 59k. So if and when the price action goes sub this lower one band or close to lower green band, that is again when the overall risk might go down. Right now it's at around that valuation of the green band is slightly under $60,000. So if Bitcoin were to fall at or close enough to 60k, the overall composite risk might also fall. So this means that again in the typical end of the bear market year, like there was in 2015, in 2018, in 2022, all the way to 2023, accumulating below the green line, again not financial advice, was the way to go. Looking through the lens of history, and you can see that the time spent below the green line has actually increased from bear market to bear market. Again in 2014, 2015, only a handful number of weeks. In 2018, 2019 time period, two zones over here. First in November 2018, starting that point till about April 2019, then again in that March to May 2020 drop. Whereas in 2022, straight away from June 2022 till about November 2023, the price was lower than the green line. So this hasn't happened yet in 2026. Maybe it starts looking like that way since June, July 2026. The next major model, again, the weight for this regression model is almost 25%. That's the overall weight on this composite risk model. The next major model is the time weighted average price model. This risk, as mentioned previously, the risk level 7 and 8 right now from the time weighted average price risk, you can see whenever the price goes in this risk level 7, like it did in 2018, spends a lot of time in this risk level before dropping at the end of the bear market. Even in 2022, not as long of a time, but that brief period provided a false sense of security. This time around as well, the charts are starting to look more similar to 2018. Again, you can zoom it in over here. Probably again, there were a few days in that drop where the risk level 8 was actually achieved. So when the price action went in on May 10th, when the price action went to 82k, there was a 1 day single print of about risk level 8. These risk levels are proportional. So for example, over here, these are percent based deviation between the price and the time weighted average price. The white line over here is the time weighted average price. This is the baseline value created over a year's worth of trading. Bitcoin doesn't spend any time at or close enough to the time weighted average price. Even at the bottom, you can see over here from cycle to cycle, the risk levels at the bottom have been keeping on increasing. For example, in 2014-2015 time period, risk level 1 was bottom, which was actually lower than the time weighted average price. In 2018 time period, risk level 2 was the bottom, about 12 to 15% higher than the time weighted average price. In 2022, risk level 3 was the bottom at around 25% higher than the time weighted average price. In 2026, maybe risk level 4 is the bottom, which is roughly speaking about 50% higher than the time weighted average price. The time weighted average price is trending to 30k. If we add another 50% on 30k, the bottom for Bitcoin this time around could be closer to 45k. So this is calculated not just like a simple moving average where it's looking at only a conviction or a measure of shorter term activity. This is measuring the conviction over time rather than temporary volatility, and the difference between the price is proportionally adjusted and percent based. So for example, in 2018, although the time weighted average price was 1/10 of what it is today, the deviation was at around 137%. Similarly, now that the numbers have 10x, from instead of being 2800, it's 28,000. As it is all proportionally calculated, the difference is around 168%. If and when the price were to fall in the risk level 6, we haven't seen the risk level 6 since 2023 October. That would be a first primary indicator that the Bitcoin accumulation risk has lowered, and at or near risk level 5 is where I personally think about DCing into Bitcoin. We are not financial advice. At these levels, again, you might find people saying that the Bitcoin market cycle bottom has already occurred, but from this time weighted average price model, which has been true from cycle to cycle, again, a jump from risk level 3 at the bottom in 2022 to risk level 7 is somewhat unjustified. Again, from cycle to cycle, what we have seen is that risk level jump only one level up, not 4 levels up. So that's one indicator. The third most indicator is a 20-week simple moving average price risk. Again, at the bottom, it's closer to 0.2 to 0.3. It's at around 0.4 at this point. Again, the sharper the nature of the drop, this model tends to favor those kind of drops. So, for example, at February 2026, this model had said that the Bitcoin accumulation risk was essentially zero. And in the shorter term, it was right, because this model again was helpful in predicting that now at 62k there might be a counter trend rally to 82k. So, but again, directionally speaking, at this stage of the bear market, the 20-week simple moving average price based model tries to predict the shorter term moves, not the longer term trend. That's why, again, even at the previous bottom, you can see the risk level was 30% rather than, again, 10 to 12% as it should be at the bottom. So the weight for this model is also about 20%. The machine learning based price analysis for Bitcoin says that if there is no panic involved in this correction that Bitcoin has started to have, in the next 6 months, the floor for Bitcoin could be at around 59k if the price were to stay in a non-panicky mode. But I would imagine that there would be at least 1 month of a panic now that Bitcoin has visited so much of a counter trend rally in the middle of a bear market. 1 month of panic gets Bitcoin from The current price, let's say the panic month is from starting now to middle of June. In 1 month itself, the price of Bitcoin could be less than 60K, and then from that baseline level, using the same proportional valuation, from instead of a drop from 72K to 60K, maybe the trend starts from 60K itself, and proportionally speaking, a drop of about 20% from 60K level would be another deduction of $12,000, and floor for Bitcoin becomes more closer to 48K. I don't imagine a 6 months of continuous panic. If that happens, the floor for Bitcoin could be around $41,000. That's the panic case for Bitcoin. This is time series based price forecasting using almost 12 years of data, starting 2014. The price action at a weekly average level is analyzed through the lens of seasonal ARIMA and LSTM based machine learning model, and these bands over here, or the lines over here, are the confidence levels based on standard deviations. So a non-panic bear case for Bitcoin is at around 60K. Panic case is close to 42K. But again, that assumes that there is a 6 months of continuous panic or distress in the market. Again, taking a midpoint is more palatable, and that midpoint is closer to, as mentioned previously, somewhere between $48,000 to 54K for Bitcoin. All in all, if we were to estimate a bear market bottom for Bitcoin, again at this level, again this bear market bottom is heavily influenced by the time weighted average price. So I would keep that analysis to the side. Right now, comparing this market through the bear market through the lens of past bear markets, what we have seen that again this time, or this particular iteration of the bear market, this 2026 iteration, compared to the last bear market, has held better compared to the past bear market performance. In the bear market year in 2022, the performance was negative 65% from the yearly open. In 2018 was negative 72%. Maybe this time around there is a negative 50% from the yearly open, and if that were to happen, 2026 yearly open was closer to about 88 to 90K, or 50% on 90K is somewhere close to 45K for Bitcoin in 2026. With all of that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.